assessment of China? How should investors position?
The headline valuations in China look quite cheap on the face of it. They've looked like China's trading on 10 times forward earnings, and that's kind of been the valuation multiple for a while, despite the market indices going up and down. And I think that's underscoring the fact that earnings have been under pressure in terms of earnings forecast. And what you're dealing with is a structural slowdown in the economy, and you have an administration that's comfortable with a slower pace of growth. That's not anything new, but what it does tell you is there isn't going to be any major stimulus plan forthcoming anytime soon. Besides, the question about where do you finance an additional stimulus from when you've got tax revenue growth under pressure. So you've got a scenario, a backdrop of economic slowdown, and I think earnings are at risk. So is this market at 10 times, or is this probably a higher multiple as earnings miss expectations? I think there is a risk of missing earnings expectations, and in that respect I think China may not look as cheap as it is. Surely within the aggregate market there will be some opportunities. Some stocks have certainly overshot on the downside, but equally there is a risk that economic growth or earnings also overshoot on the downside. So at this point in time, I wouldn't really go out and seek aggressive risk in China. I certainly think defensive positioning is still the best way to go in China at the moment.
What about for Japan? We're seeing some positive earnings surprise there. How should investors position?
Yeah, so I think Japan's a completely different story. If you look at the market rally that's happened since late last year, it's been substantially driven by a weaker yen. And this inverse correlation will probably hold true in the short term, and that's still going to be the dominant driver for Japanese equities. But the real story here is a domestic story. Now, that's not something that's going to happen overnight. It's going to take time to evolve, but we think there's considerable upside to earnings in Japan as the operating leverage kicks in, initially led by a weaker currency, but eventually by better domestic demand, which then will drive better corporate margins, better profitability, and eventually better earnings. So in that respect, I think the Japanese equities do look very attractive. Short term, yes, the currency will be a dominant factor, as I noted, and I think Japan's probably looking for a pause, consolidation, perhaps a modest correction. But I think if one takes a 6-12 month view, then I think Japanese equities definitely look like in a much better spot.